Good morning, everybody, and this is your Dow Jones day trade setup for today. So starting off on the monthly, I want to highlight two things here on the monthly. Firstly is diversions from the previous swing low to where we are here. Okay, you can see there, draw a line along the bottom, you can see it's pointing down, draw a line on the bottom of the price, it's pointing up. That is diversions, and that is bullish diversions. We do have what is looking like a fairly decent monthly pin bar forming, and I'm just going to take this monthly fractal here as a line in the sand. So there's everything to play for. This is really looking like a very strong flag, and if that flag breaks to the upside, you have a measured move. I won't go from the bottom here, but from this swing low here, if you measure that to the upside there, you have a 10,900 pip move. That's a 42% gain, which is massive. Obviously not in 1 year or 1 month, but over 2 or 3 years. That's kind of what is setting up at the moment. Anyway, let's get down to our day trading levels. So first things first, we have broken through this area here, and we've been looking for it for quite a while. You see, we had 3 touches here, and those of you that watch this channel for quite some time always know that I'm always of threes. So we're always looking at 3 touches at something. My averages are all multiples of 3 or 3. My time frames are also, my preferred time frames are also multiples of 3. So anyway, it's that's kind of the situation we have here. So 3 attempts here, and then a breakthrough. I'd like to see a retest of that. So we are at the 155 here, and you can see the monthly level that we need to get through is 33,561. And let's just get down to the lower time frames, because you're not going to see anything else here. Clear breaks, we are kind of hovering here. It's not exact, but have a look at all the interaction at this area here where we are now, and that is at 33.22. So I'd be reluctant to be jumping in long just here. We do have a crossover. We've got a break of the 155. I want to see a pullback onto some structure, and 32.778 is the first piece that I'd be looking at. If we get down to the hour, there's nothing really on the hour that changes. Look at the oscillators, extremely overbought. Trend is up. We're too far from the moving averages for me at the moment, looking really tight. I need to see some kind of a pullback. Now, when the high time frames are like this, you need to switch down to the lower time frames, and realistically, that is the closest area, and that would be 200 points from where we are now. Look at the oscillators though. Oscillators in the 15 minutes are indicating completely different. So, dare I say, pay attention to the 5 minute. Get a level in on top of the high of Friday, and what you're looking for is a bit of a base to form on top there. So you want the oscillators group to the downside, you want price to come back and test this area. Then what you're looking for is an entry around here, a stop around here. So it's around 127 point stop loss, and you are looking for 240 point gain. So that's kind of the view that I've got. If you do this on the 15, it's quite far. So you probably get a decent setup on the 15 as well. So that's the one scenario. It's not my preferred scenario. Preferred scenario for me is a pullback to 33,022 or 3,300. I would definitely expect buyers to come back at 3,300, being a big round number. If that gives way, then I'd expect a move to 32,778 for accumulation of longs from there. But pay attention to this little range. I see all the indexes are doing it at the moment. So this buying frenzy on Friday before a weekend, it could be a sign of bigger things to come, but it could also just be a retest of a break ready for a rollover to the downside. So keep your wits about you. The levels that we need to clear on this for a potential trend reversal is pretty much, in my opinion anyway, 33,561. I'd want to see a daily support up there before even considering a move to the upside. Should I say a long-term move to the upside rather. Anyway, that's kind of my view this morning. Be very careful They have no intention of getting trapped here. So, and that's typically what happens is people jump in at the end of the up move that's been going because you're frustrated you haven't had areas to enter. And if you look at Friday's price action, there wasn't really any opportunity to enter. You could have entered in sort of these patterns off the moving average and then taken a gamble. But for me, I would have wanted a break and a retest of this, and you didn't really get it. So anyway, be careful. I think whatever you do, small position size, tight stop loss, and wait for the move. If it does start falling hard back into these areas here, watch carefully because I'm pretty sure buyers will step in and you'll be able to ride that wave to the upside with a little bit more, far more lucrative trade than where we are sitting at the top here. But there's still a trade here for a break of this range to the upside, so pay attention to both. Anyway, that's kind of my view today. I hope it helps, and we will catch up with you tomorrow morning. Cheers for now.